Hello and good afternoon. This year at Money 20, one of the big focus areas is going to be on trust and uncertainty. Money 2020 has identified fraud as the ultimate violator of trust. And at Cable, we couldn't agree more. I'm Candace Sjogren. I'm the CRO here at Cable. And today I'm joined by Natasha Vernier, our co-founder and CEO. And we wanted to take the opportunity to share our experience of how we can solve the huge issue of fraud and financial crime, which results in $4 trillion laundered every year, while industry currently only captures about 1% of that. And so, Tash, thanks so much for joining today. How are financial service companies approaching financial crime in today's environment?
Hi, Candace. So financial services companies today are quite rightly focused on having controls in place. If you look at the regulatory requirements that they have with regards to financial crime, BSA, AML, they have to first of all have financial crime controls in place. And then they have to do some other stuff, one of which is independently testing whether those controls actually work. Now, of course, you have to have the controls in place before you test them. And we've seen a big surge in the number of really great control providers in the industry, companies like Alloy, Unit 21, and many others. And so financial services companies have been really focused on getting controls in place. And that's great and that's right. But it's now time to shift the focus to the next step of the process when really trying to fight financial crime, which is understanding how those controls are actually working.
And so, why is the current approach to financial crime broken? What's not working?
I think it's really the fact that nobody knows how well their controls work. If you take a sort of everyday example, if you're driving a car, there are controls in place. You have brakes, you have oil in your car, you have, windscreen wash. There are tests to tell you if those kinds of controls are working. There are lights on your dashboard. There are maybe noises that ping when your brakes are not working. You understand at all points in time how well those controls are working. And the same is true across really lots of industries. InfoSec and security is a good example. There's lots of testing. There's lots of understanding how well your systems and controls work. In financial crime, that just doesn't exist today. And that's why the current approach is not working. That's why we're only catching less than 1% of all of the financial crime happening globally today. So the key thing here is we need to bring the financial crime industry up to par with basically every other industry and make sure that everybody actually knows how well their controls work.
And so, not every financial service technology company is directly regulated by a federal regulator. And many fintechs today have a check the box or set it and forget it approach to financial crime. Why doesn't that work?
So the really interesting dynamic that we have at play with what you're alluding to is you have the regulated entity that is getting a lot of pressure from regulators to understand how well their controls are working, but also to understand how well the controls of their fintechs are working. Those fintechs, as you point out, they are not required by regulation to actually have those controls in place or to understand how well they're working. But the fintech can only continue to exist with the help of that partner bank by being able to continue to work with that partner bank, by having that regulatory relationship in place. And so the partner banks, they are requiring a lot more from their fintechs today. They have to understand how well the controls of the fintechs work. Those fintechs are, through the indirect relationship they have with regulators through their partner banks, under much more pressure to have good financial crime controls in place, to have clear communication with their partner banks, and to be able to evidence to their auditors, to the partner banks, and through those partner banks to the regulators that they have the controls in place and that they do work.
And what are regulators doing right now? Obviously, a lot's happened this year following SVB, and there's been a number of consent orders that have come out from the federal regulators. How are they weighing in on financial crime?
It's really interesting. When we started Cable nearly 3 years ago now, in the very first business plan that we wrote, we talked about how a reason for needing Cable was that the regulators were starting to talk about effectiveness and they were starting to ask banks how effective their controls were. What was interesting is that it took a little bit of time for that to really filter down and have the impact felt in the industry. Today, this year, regulators have talked about effectiveness in multiple orders with banks. They've talked about effectiveness in regulatory guidance, and they have quite clearly explained to the industry, this is from the Fed, of course, that they will be directly looking at the fintech programs that banks have in place as well. So not only are the regulators talking about this in orders and in new guidance, but they are specifically discussing this in their regulatory exams with banks.
And so, what should the financial services industry be doing to improve their ability to understand if their controls are working and to be able to answer this new regulatory scrutiny?
The answer is simply by doing 100% effectiveness testing. It is absolutely possible to know, based on all of your data, whether your controls are working effectively. That's what we do at Cable. We tell you, based on 100% of your end customers and all of their transactions, how well controls work. That's what the industry needs to do to really up-level their financial crime framework and to not only meet their regulatory requirements, but also to appease their regulators and to ultimately catch more financial crime.
And how are banks, BaaS programs, crypto platforms, and other fintechs using Cable today to create certainty and assurance that their financial crime protocols and controls are actually working?
Yeah, so we have banks like Axiom and Grasshopper using us. We have crypto platforms like Ramp Network, and we have fintechs like Tide and Mercury in the US using our platform to really do a number of things. The first thing that we help them do is understand if they're meeting regulatory requirements. That is the most foundational thing that banks, fintechs, crypto platforms need to know. They need to know if they're meeting the requirements that the regulators have set for them. And we can tell them that for all of their controls across all of their customers. The other things that we help them with are things like performing quality assurance. Quality assurance is really difficult today. It's usually spreadsheets based, it's very time consuming, and once complete, it then takes a whole bunch of time to actually put in place the business intelligence and the reporting. Cable takes away all of that pain. So we're not only helping our customers understand if they're meeting regulatory requirements and if their controls are working, but we're also helping them to save tons of time on the human operational workflows that they can't escape, like quality assurance. Finally, the last thing that we're really helping our customers do is we're helping our BaaS banks, our Grasshoppers, our Axioms, etc. We're helping them onboard and manage the relationships with their fintech programs in a much more effective way. They can gather policies and procedures and org charts and documentation. They can understand all about the programs that they're wanting to work with. They can understand the risk that they're bringing to the bank from a financial crime perspective, and they can manage that relationship on an ongoing basis.
And can you just give one example of something that how Cable has supported one of the fintechs or banks that we're working with today? And I can also give an example. So having come from Socure prior to being here at Cable, we had, I would say, maybe 1 in 3 or 1 in 4 of our customers were coming to us often saying we've either had a fraud ring or a fraud attack, and it's your fault. And we would have to go back and do a retro analysis, and then we learned actually that's not the case. In many instances, the technology was broken. The way that they had built their onboarding stack wasn't actually capturing what they had written out as their policy to capture. And so it could be that they were capturing emojis instead of email addresses or whatnot. What are some examples of what Cable has unearthed for our customers that has created value for them?
Yeah, so we've actually never not found ways to help our customers become more effective at fighting financial crime. We always find regulatory breaches, control failures, or ways to help our customers become more effective. Some specific examples of things that we found include customers who are well over 150 years old, where there's been a transposition in how they've entered their year of birth, all the way through to things like customers without customer risk assessments, even sometimes without sanctions checks. And for example, customers trying to actually get around controls. So a bank that didn't want to onboard sole proprietors, and they were putting ink at the end of their name. And that was passing through the bank's controls, but we were actually able to identify that and help the bank understand that their controls were not as effective as they could be.
And if there's a fintech that's watching this today and they're not currently regulated, why would a fintech want to work with Cable to get ahead of regulation?
I think the key thing for the fintechs to really understand is that the power actually sits with the banks. I think there's been a misconception in the industry for the last number of years because of the power of the VC-backed fintech and how much money has been going around. But the banks actually hold all the power here. They can turn fintechs off overnight if they deem that their controls are not adequate and are not protecting the bank's license. At the end of the day, however much a bank wants deposits and wants revenue, they want their banking license more than any of that. And so they will do everything that they can to protect their banking license. The reason that fintechs should be getting ahead of this and using something like Cable is because it aligns them and their partner banks on what controls are in place, on the interpretation of the regulatory requirements, on prioritization, and on remediation steps. If you as a fintech do not have absolute clarity about the requirements, the controls that are in place, and if any of those were to not happen, exactly what would cause the partner bank to turn you off, then you should be going to your partner bank tomorrow and having that conversation. You should be saying to them, what has to happen for you to turn me off? And you should be putting in place anything that you can, which almost certainly includes Cable, to make sure that that does not happen to you.
And with all the focus that's been happening with regulators on banks recently, with the Blue Ridge order, Cross-River Bank, most recently with Goldman, there's a lot of conversation about effectiveness testing and ensuring that fintech programs have the right measures in place to prevent financial crime. So what should banks be doing now in advance of their next bank examination to adhere to new expected standards that are coming down the track?
Yeah, we keep hearing from our customers and our prospects that regulators are asking not only about effectiveness testing of their fintechs, but also how they do 100% testing. So that's a really, really interesting challenge for those banks to go and solve, right? You either hire 100 people or you use technology to do that for you. And I don't think it's sensible for banks to start building out this technology themselves. Not only does the regulatory requirements mean that the testing has to be independent, which is really easy to evidence when you use a third-party provider like Cable, but you want somebody who is able to keep track of the market, able to look at trends across both partner banks and fintechs, so that you always know that you have the most up-to-date technology. Partner banks should be putting in place technology ahead of these regulatory exams. They should be going into those regulatory exams able to explain how they communicate with their fintech programs, how they align on understanding of regulatory requirements and controls, and importantly, how they evidence to themselves, to their boards, to their executive committees, that they know 100% of the time that those fintech partners are actually compliant with the regulation and have effective controls.
I was actually speaking with a fintech this week who said, we now have built out redundancy. And this year has been a year of uncertainty for us. And so we're uncomfortable partnering with one bank. And so now we've partnered with several to create redundancy. What we didn't plan on in building out redundancy was that we now have to report out to multiple banks and multiple entities. And so we found that we're constantly in review. There's always someone auditing us. And so what are the benefits of using Cable as a fintech to be able to report out to multiple entities should you choose a redundant plan?
Yeah, so it's a really interesting problem to have, and it's only going to become more prevalent as the regulators ask their banks to understand their fintechs in more detail. At Cable, we have a really simple parent-child structure that can work both ways. It allows the partner banks to see multiple fintech programs, but it also allows the fintechs themselves to see their data split by different partner banks, to automatically understand the risk with each of those partner banks, and to automatically produce and download and share reports based on that data on a per partner bank basis.
Awesome. And so if you are a bank or a fintech and you are attending Money 2020, we think that this is the year. This is the year that you're going to want to have a conversation with Cable. So why would a bank or fintech want to meet with us this year, Natasha?
Not only because we're hosting a range of awesome events and dinners in Vegas this year. Candace, myself, Josh and Stefan, some of our team will be there, which will be really great. You should come and chat with us because 2024 is going to be about compliance. If you're a partner bank, you are going to be talking about effectiveness testing with your regulators if you haven't already. And if you're a fintech, you're going to feel the weight of compliance from your partner banks. We can alleviate that. We can make the relationships between partner bank and fintech easy. We can make the relationship between partner bank and auditor easy. And we can also make the relationships between partner bank and regulators easy.
Thank you. And we'll see you at Money 2020.
See you there.